down. All right, so my PMI right now is $586 a month.
586.
586. 586.95 is my PMI.
Is that even like a lot of money though, considering what you're paying anyways?
No, so look, let's do the math. This is what I'm trying to tell you, right? So you got 586. I had it for 2 years.
Okay.
So that's 24 months. So that's $14,064 that I've paid in PMI over the past 2 years since I owned this house, right? Now, I paid $900 for this house. If I were to put down 20%, that's $180,000 I would have had to come out of my pocket plus closing costs. So I would have spent another $25,000 on closing. So you understand where I'm going with this? Why I say PMI is not the devil, ladies and gentlemen? I'm using my own thing as an example here.
Right.
So if the PMI is only 586 for 24 months, that's only $14,000. So I decided to do 10% down, 90,000, right? So even if you add that 2 years I've been paying PMI, 14,000, the 90,000 down payment, the closing costs, call it 25,000. That's $129,000 that I spent with the PMI, the down payment, the closing costs, versus me doing 20% down. That's 180,000 plus 25,000. That's 205. So take away 129.
Yeah, what's the difference between the two?
So that's $76,000 that I got to keep in my pocket, and plus PMI is tax deductible.
Yeah, and okay.
So why do I care about the PMI?
Right.
If I can afford it, why would I go out here and put 20% down when I don't need to? Because right now the house already has enough equity, way more than 20% equity in the home for me to remove the PMI.
Right.
But I'm not going to do any of that until the house is completed. And then now I call and I have a much higher valuation compared to what I owe. And now I get that PMI removed, and I still have a gang of equity in my house. So now what my play might be is if I really want to, after I do everything's finished, I might do a line of credit and probably pull out $800,000-900,000 and have that money sitting on the sideline for opportunities that might or might not come. Who knows?
So now my only question with this is like, don't people just put down more money to avoid having to pay or have more debt? Because that's like the biggest thing is like people want to put down as much money as possible. And I guess in rare cases to kind of just have less debt, you know? Or it's
That's why I didn't do a construction loan. Because if I'd have did the construction loan, right? Again, I would have needed at least $1 million. I paid 9, that's 1.9. You know what I'm saying?
Yeah.
So if I'd have did that, let's just call it $2 million even. And now I got to put down 20% plus closing. So now that's $400,000. So now I'm borrowing 1.6. So now with a 1.6 payment, a 1.6 debt, right? Plus these taxes going to go, and that's if I did the mansion. I do the mansion, my taxes go up to $4,000, $40,000, $45,000, right? The principal and interest payment. Now I'm sitting here talking about $11,000, $12,000 a month. Even with a dirt cheap rate, I'm still talking $11,000, $12,000 a month. So for me, I said, what am I more comfortable with? For me, again, don't be house rich and cash poor. Rule number 1. I always say this. I have to live by that same example.
Right.
What do I feel comfortable with? I feel comfortable with, I pay $6,400 a month for this house.
Okay.
Right? I like $6,400 versus $12,000 any day of the week.
Yeah, I would too. But
because if shit hits the fan, I know I can come up with $6,400 every single month.
For how long is this loan for?
This is a 30-year mortgage.
So it would have been 30 years either way, whether you're paying
either which way.
Yeah, so I mean.
But I'm not going to stay in this loan for 30 years.
Well, I'm saying, but like, who would want to pay $12,000 versus this?
But that's what I'm saying. Yeah. So it saves me $6,000 a month. It makes me more comfortable, right? Now, am I happy with the amount of money I'm spending out of my pocket right now? No.
Because the house isn't done, right? So
it's only because the house ain't done, and I've been going through the motions and the struggle with it. But I know I'm almost there. So I just got to be patient for this year. Let me run my plays. Let me do everything I'm doing. Before I know it, it'll be Christmas.
Yeah.
And then I'll be in my house. And then all of that will be well worth it. And I know whatever money I put into it, I can get it all back out dollar for dollar. Know why? Rule number 2, always have an exit. I have an exit.
Right.
Which is the refinance, the home equity. I won't refinance it. I'll do a home equity line of credit because I know my house is going to be worth a lot more than what it is today.
And that line of credit, you have that money just sitting there? Or
So I'll take the line of credit out. It'll be a second mortgage, a home equity line of credit. And now I'll have the monies that I basically put in the house, I'll have it all right back.
But it's a line, well,
It's a line of credit. So now if I use it, I have a payment, obviously, right?
Based on however much
I use.
Right.
But if I'm going to use that bad boy to now, either I'm going to say I'm going to keep this on the sidelines or I'm going to deploy this capital into something that now is going to pay for this whole entire house.
But you say sidelines, though. Don't you have to use it within a certain time?
No.
No?
No. You got 10 years to draw from it. So if I pull out $800,000, I can now have this $800,000 as a line of credit sitting. It's basically money in the bank, basically.
And you can use that for whatever you want.
Yeah, I could go fucking buy a Ferrari.
With equity from a crib?
Yeah.
Do people do this?
Yeah.
Yo, that's crazy.
I go buy a Ferrari.
I thought it was just for the house only. Like, you have to put the money back into the crib. Like,
no, I can go buy a fucking Phantom if I wanted. I could go to Dubai for a month. Like,
wow.
I could do whatever I want.
So is there anything, but then you still got it.
You got to make a payment on it. It's a debt still. It's still debt. Let's not get it twisted.
Are the rates high for what you got to pay back?
Yeah, it's going to be, because the market's higher right now. So it's going to be a higher interest rate. That's why I said I'm going to just do the line of credit so I have the money back. That way now, if I need the money for a play, I'm basically just reusing the money that I already just spent.
Right.
So I just recycled my own money.
Yeah, yeah.
You know what I'm saying?
Damn,
now,
that's dope.
Well, it's called strategy.
Yeah, but I feel like you have to have a business plan in place. So you can't just be like running
Well,
around
you can't be out here like a fucking chicken with your head cut off, just trying to be out here and just go like, hey, I'm gonna go buy some real estate and do
that's
shit.
Dangerous.
But this what do I always talk about though? I always say, yo, if you don't know what the hell you're doing, you need to sit here and educate yourself and learn what the hell you got to do.
Yeah.
Rule number 1, don't be house rich and cash poor. Rule number 2, have an exit strategy.
Right.
I just gave y'all a real life example. I don't even know how we got on this topic, by the way. But
somebody asked a question about something about
a PMI, yeah. But this is what it's all about. You know what I'm saying? Like, so now I take this money, I get $800K in my hand. Now I can go out here, I can go buy a building. Like, what I'm probably gonna wind up doing is go buy probably a 50 or 100 unit building, and get enough cash flow out of that, net cash flow, to pay for my house and the line of credit.
Yeah, that'd be a smart thing to do, so you don't have to worry about the house.
I don't have to worry about nothing. Yeah. And then I'm gonna buy that smart, and I'm gonna refi that shit out and get my money back out that I put back in. And now I'm just playing with the same money over and over and over and over again.
Yeah.
So in all honesty, that's why I said I'm gonna sit it on the sideline and wait for an opportunity that might or might not come. But something will come across my desk by this time next year when I'll have that $800,000 just sitting on the sidelines, and there will be a big enough deal to where now Garland Gardens will be free for me.
That's the play. I have to watch this back. Somebody's saying
house hackonomics, ladies and gentlemen. House hackonomics. There's many ways to house hack and build wealth for real estate.
I gotta read the book.